Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited, and here is your weekly technical analysis of LME 3-month nickel and zinc. LME 3-month nickel. I said last week, and I quote, "A bit of movement this past week, but it seems to have shot its bolt, so to speak," end of quote. We didn't see a bit of upward movement 2 weeks ago, with prices pushing up over the combination of declining short-medium moving average above, currently at 22,485, and the bright red upper tine, currently at 22,020, of the February to April bearish shift pitchfork. The market's timing, as I said last week, was lousy. It would have been better to try a week later, as in this week, when these two have separated and thus individually have become weakened than when they were combined, and thus stronger. So despite breaking through both, so much energy had been used in pushing higher that all that could be achieved was an indecisive doji cross right at the top of the market, and then to see last week and this fall away lower, down through the combination and down through the February 2014 high at 22,155 and the May 2014 high at 21,610. Prices this week have pushed even lower, below all the congestion that we saw over May and early June, based around the key 21,000 level. Now, last week I said I'd take a fresh look at this action. had taken a fresh look at this action since early May, and I highlighted maybe one of two possibilities here. Thus, I pointed out that we might have here either a rounded bottom or a descending scallop bottom. Descending scallop pattern, really. I expressed my personal thoughts that the rounded bottom idea looked weak. Nothing has changed on that idea. I also looked at the more reasonable pattern of a descending scallop. I said at the time that this, and I quote, looks like a ski jumping profile, and the market can choose to shoot higher or fall back into the congestion around the 21,000 zone. I suspect that may be where we might look right now. It also suggests that the 21,000 zone will see the market break lower, but let's see what it does in trying to get down there first, and that's the end of the quote. Well, Friday, and then yesterday especially, prices didn't not only reach 21,000 but exceeded it on the downside, such that apart from the September 2022 low at 2050, we have little in the way until the middle time, currently at 19,385 of the bearish shift pitchfork. Now below this time we do have support, but it doesn't start until the congestion between 17,815 and 18,850, consisting of the August 2019 high at 18,850 and the June 2021 high at 18,110, the important July 22 low at 18,230, and the October 2019 high at 17,815. Thus it seems reasonable now to indicate some potential targets below for such a pattern. Okay, so a primary target X below would be in the 18,900 zone, with a hard to reach secondary target X1 in the 15,800 zone. This is only the start, so these may be finessed further, or even retired, depending on the circumstances. LME 3-month zinc. 2 weeks ago, we saw the market start a small reactionary move higher that pushed up through the upper bear channel and significant 2023 downtrend, currently at 23.59, as highlighted in dark blue on my daily chart. Whilst this was very interesting, in truth, all the market managed to do was rise up to the next overhead small congestion at 24.97, plus the lesser Fibonacci line at 25.09, and then turn back down again with a resounding combination of a bearish dark cloud cover pattern and bearish double. Prices have since followed down along the breached downtrend, using it as a declining attractor, such that we are back to where we started off 2 weeks ago. This opened up the question, which so far may have one of three answers, as to whether we have in the May to date action a possible bearish halfway hesitation, or a possible bearish descending scallop pattern, or finally a possible double bottom in construction. I'm not sure on any of these as yet, though with having just finished my nickel commentary, I confess to a slight preference for the descending scallop pattern. However, it is still too early on any of these as yet. Overall, we are still within the purple May to August 2022 bearish shift pitch hook, in between the overhead purple middle time, currently at 25.76, and the lower time below, currently 20.41. To add to this, I have over many weeks spoken a lot about the March 2020 to June 2022 ascending expanding wedge pattern. This is way up off the top of my daily chart. I've given in the past some outlandish potential targets for such a long-dated and wide pattern. The primary, outlandish target for such a pattern was in the 25.45 zone. This was achieved 5 weeks ago. 2 weeks ago, I laid out the potential secondary target X1. This was for a far harder to reach target, and it would be quite a way lower, down in the 13.45 zone. This is one definitely put in the back of your diary and only look at occasionally. In the meantime, below we have more immediate support from the October 2020 low at 22.82, which has been breached at the turn of May into June, but there is an argument that it barely had a second consecutive close below it. We therefore might consider it breached rather than broken. This ties in with the penetration and breach 5 weeks ago of the lower bear channel line. It wasn't enough then to verify it, and prices pulled away higher 3 weeks ago. Pulled away higher. 3 weeks ago I asked a question, and one that is still open, as to whether the moves against the bear channel were just a tickle or perhaps the first of a number of attempts to break it. Back then it did not look so. It did not look as if it was going to be a serious attempt. But now I'm minded to think that these attempts at both the upper and lower bear channel trend lines might mean that we are coming to the end of the lifespan of this bear channel, and the market may now be testing for a way out.
Thank you for listening. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and the back of this broadcast. Copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.